You must be watching some of my videos on life insurance, and usually traditional way life insurance people use for risk management. But there are some ways we also can use life insurance is funding the education cost to the kids. Create a policy and choose to deposit whatever the amount we do, like similar to RESP, we do that. I'm not just talking about the regular life insurance policies. I'm going to be talking about how you can leverage the life insurance to fund your kids' education. So she decided to contribute $200 per month into this contract. She can access to this money tax-free, so she doesn't have to pay taxes. How you do that? Yeah, hi everyone. This is Prasoon back again. Welcome to my channel, Prasoon Srivastava, Financial Planner. You must be watching some of my videos on life insurance, and usually traditional way life insurance people use for risk management, for protecting their mortgage, but there are some ways we also can use life insurance is funding the education cost to the kids. You must be wondering what exactly, how do we fund our kids' education through life insurance? Yes, it is true. So there are some ways we can create a policy and choose to deposit whatever the amount we do, like similar to RESP, we do that. And then it can grow for certain time. So it's very important to watch this video till the end, because I'm not just talking about the regular life insurance policies. I'm going to be talking about how you can leverage the life insurance to fund your kids' education. It's one of the very unique way to do that, and you'll be amazed to see the result actually when we're going to be watching it at the end. So let's talk about Sarah, example of Sarah, and she's very successful, very intelligent girl, and she is recently blessed with a kid. She wanted to set up a plan for her kids' education, and because she understands that right now education cost has been increasing phenomenally. Each year the cost of education is increasing at least 8%. So suppose today's date cost of education of a 4-year degree program is $80,000. Maybe 20 years from now it's going to be $200,000, right? So we have to accumulate so much upfront. So she decided to contribute in a participating life. So Sarah was kind of very much confused at how she should plan for her kids' education, which has been rising phenomenally, right? So she met a financial planner and wanted to explore. So financial planner like myself advised her to create a policy. So she was surprised like how she can create a life insurance policy and fund for the kids' education. Yes, you can do that. She can do that. So this planner planned a life insurance policy, which is called participating life policy, which funds the dividends also, whatever you contribute to in. So she decided to do that and created this participating life whole life policy for 20 pay. So she's going to be paying for 20 years. So she decided to contribute $200 per month into this contract of participating life policy, and existing scale of the dividend was 6.3%. So now we going forward 20 years from now, Sarah will have accumulated fund in her kids' education inside the policy around $7,000. It may be more, it may be less based upon the dividend scale what company is paying. Right, so this is another bucket she created for the kids, and she can access to this money if the kid wants to go to the college, university. She can fund that education cost from that cash value inside the policy, and it is growing tax deferred. So the accumulated fund around 70,000 which she has got 20 years from now, she can access to this money with some strategies tax-free, so she doesn't have to pay taxes. How you do that? You can contact me and I can let you know how exactly you can structure to get this money from the life insurance contract without paying in taxes. So you must be wondering why I'm not talking about education plan, like registered savings education plan, because that's also people save into that plan. But the thing is, in RESP there are advantages, but disadvantages also there attached to it. The advantage is that whatever you contribute, government put in 20% of that, but the maximum limit is there, and the maximum limit government contribute to that plan is $7,200 currently, right? So, and then also all lifetime maximum contribution you can make only $50,000. So point is, the cost of education is growing so much So that amount which you're going to be contributing into the plan RESP won't be enough to supplement that cost of education, which is increasing 20 years from now, right? So you're going to have a two buckets. So you can have a RESP as a one bucket, and you can have a whole life participating life insurance policy as a second bucket. So you can use both the bucket to grow your money inside the contract or inside the RESP without paying any taxes. Okay, so I'm going to be talking about RESP, that what are the disadvantages of setting up RESP. So even yesterday my client called me, Prasoon, if my kid doesn't want to go to the university, what's going to happen? So I said, first of all the grants which he's getting going to go back to the government, and the growth on the funds, you're going to pay taxes. So you can only use for the education purposes only, right? Whereas in whole life policy, whatever the money you're contributing and it is growing, you can use for any purposes. You can use for education costs, you can even use for buying a home down payment, or you can use for longer term, because money keeps on growing even after 20 years. You can use even supplementing your retirement later on at the age, and then it is growing phenomenally each year, right? So there is no restriction on what terms you can access the money from the life insurance contract. This is a very, very important thing to ponder upon, right? So I would say that to think about it. So you must be wondering what kind of a contract I'm talking about, like participating life policy, participating. What exactly the participating means? It's a life insurance contract. So you are having two benefits together. You're having a cash value inside the contract, and also you're having a side-by-side an insurance also with that. So means in RESP you only have one thing to consider, where here you're having two things going together. And participating, what happens that whatever the amount you're committing on a month-to-month basis, it has two components. One is the cost of insurance, and second is a savings component. So savings component will get you a kind of a growth, which will give you a dividends, means that you're participating in the growth of the company. So company gives you dividend back. So dividend can vary based upon the market condition. It can go from 6% to 6.2% to 6%, but different companies are offering different dividends based upon their profitability. So that is basically a participating. You are participating in the growth of the company, and company is paying you back some money. So you can understand, like, we are having two things going together in the insurance contract. Like, one is we are having a life insurance of the kid. So in future, even if he withdraw the money from the contract, he will also have the insurance component keep on going for rest of the life, right? For choosing which company will be the best fit for your need, you can come to me as a planner. I can understand your situation. I can find one of the best companies available in Canada. I mean, there are so many good companies which they offer pretty good dividends, right? So I can help you to find out the right company where you can open up this account. And the good thing is that since it is a child plan, so child usually go through the underwriting pretty quickly, because it's an insurance contract also attached to it. So basically, when you're writing a policy on the child, they don't have to go through any medical underwriting because it's a young kid, right? So that's also something which you need to think about it, that I can help you to find out the right company which is going to be fit to your need, and what company is giving you the better dividend scale so that money can grow in future. So talk to me, and then I can help you on that. And you know what, actually, I tell you the truth, this is a beautiful gift to your kid. When your kid is going to be 20 years of age, and if you change your ownership from you to your kid, you can do that in this policy. It's not that if in the beginning you are the owner of the policy and the kid grows up, you can change the beneficiary ownership of the policy and then give this gift as a love to the kid. So you are handing over a tangible gift to your kid, and when she or he will see that, oh, how much money is inside the policy and how they can use it effectively, they'll be so much happy on receiving this kind of a gift on their birthdays. So talk to me, and if you like this video, subscribe my channel, like it, and share with your friends who must be benefited by this video. Thank you once again.